Hi guys, welcome to the second episode of our podcast named Different Parts. Today we'll be covering a very unique topic, and that topic is how do you make your money work for you and building generational wealth. I know that money is a very, very important tool. We all need money. I truly personally think that after God and oxygen is money. Do you agree? But today I have someone with me that will be giving us more insight on how to make our money work for us and also how to build generational wealth. How are you today, sir?
I'm doing wonderful, Ms. Prudence. It's a pleasure being here. Appreciate the invitation.
Thank you so much. Thank you for being here. So let's get to know you.
Well, I'm Philip Neska, and I've been in the U.S. actually 11 years as of today. And originally from Cameroon, grew up in Limbe, schooled in Boya, then I lived a little bit in Douala before migrating to Europe. So I lived in Eastern Europe for almost 2.5 years before I moved to the U.S. So prior to getting into the financial services industry, I used to work in IT. I worked as a database administrator, a Scrum Master, Agile coach, and I was actually one of the second Scrum trainers in Maryland. The first person was Philomena.
Mm-hmm.
So I've trained a lot of people, and I've been able to help a lot of people get jobs. And while I was doing that, I was also doing part-time in the financial services industry because I saw the impact of money around everything. We go to church, we need to pay tithes and offering, right? We need, for school, we have a lot of students that are dealing with student loan. In our homes, most marriages break because of financial reasons, and so many.
Oh, I didn't know that.
so many other things. I felt like in our community there's a lot of lack around financial literacy. So too many people are making a lot of financial mistakes. We make money, we spend it all trying to keep up with the Joneses. Sometimes buying things we don't need to show off the people we don't like, and usually with money that we don't have. So I felt like.
Can you say that again?
So we buy things.
That we don't need.
Yes. With money that we don't have.
With money that we don't have.
And to impress the people we really don't like.
Ooh.
So it becomes a vicious cycle. So I saw that number one, there was a need, and number two, in our community, there's not a lot of people that are doing the kind of work that I do.
Mm-hmm.
And I felt like if I don't take the mantle and try to bring this, especially in our community, it will be a lot more challenging for someone coming out because trust is first of all an issue.
Mm-hmm.
And then even me being part of the community, I still have issues with the people in the community that usually lack trust. So
we're gonna get into the details of that. So what I'm hearing is you left Cameroon, you ventured into Europe. I hear that people from Europe when they come here they are very focused.
Yes.
Is that true?
It is.
All right. So you ventured into Europe. 2.5 years. What made you to leave Europe?
Macedonia,
without getting into too much personal stuff, but
so Macedonia, even though it was a beautiful country, but in terms of employment, there's a lot of unemployment in Macedonia.
Okay.
And
where is Macedonia? I don't know my map like that.
It's right next to Greece, Bulgaria, Kosovo, Albania.
Okay.
It's a very small country. By road to Bulgaria is 1 hour 30 minutes.
Okay.
To Greece is like 2 hours, depending on where you're coming from. So,
right.
While I was there, I felt like I needed to achieve more for myself because I've always had a vision of the kind of life I wanted to, lead. But in Macedonia, I didn't see myself achieving that kind of lifestyle. So that was what prompted me, and also the opportunity to come here and be somebody greater than what I could have been in Macedonia. So that's what brought me here.
Okay, that's good to know. So I heard you say that you were in IT. Are you still in IT?
No.
That is surprising. So you were in full-time IT, you were a full-time trainer, and then you moved to do financial services full-time.
Absolutely.
How scary is that?
It is very scary, but one thing I always tell people, once you find your purpose, fear will still be there. But now you're driven by a purpose because once God pulls you and aligns you to your purpose, He makes provision.
Right.
So to me, I was scared to start out. I and I don't encourage anyone to just, they'll usually say take the leap of faith.
Right.
Before you take that leap of faith, your faith has to be strong. It means
Exactly.
There has to be preparation to get you to that, battle. Because it's a battle between who you were and who you're trying to be.
Today.
So it's a lot more challenging than, a lot of entrepreneurs will tell you.
Okay.
But it is the most rewarding journey. I tell everybody that.
So tell us more about the financial services that you're in.
Yes.
Because you're an IT guy, we hear that IT guys make a lot of money.
Yes.
So why venture in financial services? Why not something else?
For me, I've always been a visionary.
Okay.
I feel like you have to be close to the money. And where else can you be closer to the money than in the financial services industry?
Right.
And very young, I had aspirations. I had one of my childhood friends. His dad was a banker.
Okay.
So I always used to love how he dressed.
Is it true that the banks are friends or the banks are not our friends? Which one is the correct one?
Well, it depends.
Okay. All right.
If you're an investor, the bank is your friend. And also if you understand how to leverage, the bank's, money to do things, to buy assets. But a lot of people borrow money to buy liabilities. So
Right.
depending on where you're coming from, the bank may be your friend or may not be your friend.
Okay. So let's talk about the financial services that you offer.
Yes, so I do retirement planning.
Okay, retirement planning.
Yes, college planning.
Let's talk about retirement planning. What is that?
So retirement planning, for most people, we always think we have too much time.
We are young. We have
Yes,
time.
that is true.
Yes.
But another thing is the time flies so fast, right? When you're enjoying, time goes by too fast. So for most people, in my experience, I talk with a lot of 55 to 66 years old, and they have absolutely nothing saved for retirement. And it is terrible being old, sick, and broke. Those three combinations are very fatal.
Scary.
It's not
Old,
just scary. Old, sick, and broke.
I'm broke.
And I get to see this every time. A month and a half ago, I was discussing with this lady. She's 62 years old. She has nothing saved for retirement.
How was she supposed to save, and what education did she need, and at what age would she have started that would be beneficial for her now?
I always tell people, start as soon as you start working.
Okay.
Good thing about corporate America, I don't talk down on people who work. The good thing about corporate America is if you're a full-time employee, most companies will provide things like 401k. I encourage people to leverage it.
Okay.
But due to a lot of ignorance, a lot of people don't opt for 401k because most employers will match a certain dollar amount or up to a certain percentage. But most people don't leverage it. I've had people who work for corporations for over 20 years and they didn't know that they were supposed to take 401k. They said they thought it was a Davos plan.
Wow. So what you're suggesting is if you're working anywhere and they are offering 401k, jump on that opportunity.
Take that opportunity because it's more or less 100% return on your money.
Right.
So assume that the company matches. Take for example, hypothetically, say $300. If you contribute $300, they match $200. That's 100% return on your investment, right?
Right.
So it's already positioned you in a better place. Then that is the one with your employer. From your salary, I always tell people the concept of paying yourself first.
Pay yourself first.
Yes.
But Uncle Sam, on the capitalist system that we are in, makes us to pay everybody first. So how do we pay ourselves first?
Yes.
When sometimes the money is not enough.
Absolutely, that's true. The money is hardly ever enough, but we have to make a determination, right? Even if you make $100, you have to find a way to save minimum 10%. So a simple strategy I teach people that they don't have to be geniuses to be able to do that is the first hour you go to work. Take that first hour, whether you make $10 or you make $50, put it aside for yourself. Save it in an account that
Is that every week or every
day you go to work?
Okay, every day you go to work.
Yes, that
Meaning
first
if I
hour.
work 8 hours,
The first hour of work.
1 hour is for me, 7 hours is for
Yes,
everything else.
for everything
Okay.
else.
Okay.
So let's say, assume that you make, for most people in IT, they make from $50 to $100, something like $120, depending on the field that they're in. Assuming you make $50, that first hour, you can take that, you split it across. Even if you have 2 kids, you can put $20 for yourself,
Right.
$10 for your 2 kids, and $10 maybe for your spouse.
Okay.
So you're using $50 every single day that
Day.
you work. So in 20 days, for you, it's $400. And you put it in an account that gives compound interest. Take, for example, say an IUL.
What is an IUL?
Well, it's a life insurance contract.
Okay.
Where,
Is it part of the services that you offer?
Yes, I do
Okay.
provide that.
Okay.
And before I provide any strategy to fold, I make sure that I do a financial needs analysis.
Okay.
Because you don't just want to throw a strategy out. You are from, healthcare industry.
Mhm.
If a patient comes into the hospital, you can't just look at them and say, hey, you need a Vicodin or you need this. Right?
That's true.
They have to go through the triage process
Mhm.
for you now to understand what is it they're dealing with
Right.
before they even get to see the doctor,
Mm-hmm.
before they can make recommendation on
Right.
what kind of medication or treatment plan that they have. So the same thing with me.
Okay.
If I'm working with someone, I have to do a financial needs analysis to understand, hey, where are you? Where do you
Mhm.
want to be? Where are the gaps? And then what can we start working on that is priority? Because we all have financial, challenges or financial loopholes. But now, which one trumps the other?
Right.
So we start addressing that. For some people, the biggest challenge is debt. They have a lot of debt. So we may start from there, and I can educate them on strategies on how to build the debt faster.
Right.
And we also, on our platform, we have companies that we've partnered with,
Okay.
where they can help people reduce the interest rate. They can renegotiate with the interest rate with the
Mhm.
lender, and then sometimes do a debt consolidation plan for them, where they end up just having a single payment for the month. So those are some of the things that we help people do.
So in 2 minutes, just for clarity, because I feel that a lot of people are going to benefit from this and having a financial analysis. So if someone is in front of you, can you walk us through the steps of what you look for and how you eventually have a plan in place for the person?
Yes, the first thing, I educate them on what I call a financial foundation.
Financial
So-
foundation.
yes.
I need
So-
to take a lot of notes today.
Absolutely.
Yes.
And I have free financial literacy workshops that we organize. Excuse me. So we have free workshops Monday through Fridays, 3 times a week. 3 times a day and 5 days a week.
Okay.
Except for Wednesday that we have it just once.
Okay.
So people, it's free. You can join. And we also have workshops in our office. My office is based in White Marsh in Maryland. We
Okay.
have workshops on Wednesdays, 7 to 9 p.m. And then on Saturday in the morning from 10 a.m. to 12 noon, where we
Okay.
provide free financial classes. But
Awesome. We're going to make sure that before we end up here that you provide your details
absolutely.
because I'm sure that people will be reaching out to you
Absolutely.
today.
So in terms of working with someone, when they come in, the first thing is to understand where they are. I'll first educate them on what I call the financial foundation.
Okay.
The first layer is proper protection. Like when
What
you,
does that mean, proper
Yes.
protection?
Take for example, if you're building a house,
Mm-hmm.
you start from the foundation.
Right.
If the foundation is not solid, that house won't last for long.
That's
It will
right.
collapse. So for most people, they don't understand what we mean by financial foundation. With proper protection being the first layer.
Mhm.
We're talking about health insurance.
Health
Because
insurance?
Number
Mhm.
one, if you don't have health insurance, you go to the hospital, you may deplete all your savings just to cover.
Just to cover.
Right? It's
Yep.
something I'm currently dealing with my parents.
Wow.
Right? So the second thing, we want to make sure that.
So to protect yourself, make sure you get some form of health insurance.
Yes,
Yeah.
that's number one. The
Okay.
second thing is life insurance.
Life insurance.
A
Okay.
lot of people don't understand the benefit of life insurance. Most people think it's only about dying. There are different types of life insurance.
Mhm.
The goal is for our community, especially, to be protected. I can't always stress the
Mhm.
importance of this because every single day, every one of us, we either receive a GoFundMe link for someone that's in the hospital
Mhm.
for us to raise money,
Right.
to pay for their medical expenses, or when someone passes away, we have to raise money for your funeral. And there are policies that maybe a 30-year-old can get even up to maybe $500,000 for less than $100. These are things that we need to change.
Right.
And that can help bring about the generational wealth that we keep talking about, right? But
Right.
for most people in our community, when they pass away, they leave a huge debt to their family.
So not only you're losing your loved one, you're inheriting.
Yes, you're inheriting debt,
Okay.
right? Then the next thing is long-term care.
Long-term care.
So most people.
So we have health insurance,
life insurance.
life insurance, and long-term care.
Long-term
What
care.
is long-term care?
So assuming that you're unable to do two activities of daily living, we call them
Okay.
ADLs.
The ADLs,
So you
okay.
can feed yourself, you can go to the bathroom by yourself.
What are all the ADLs?
So those basic
Like
activities.
bathing, dressing, personal
yes,
hygiene,
personal hygiene.
toilet use, toilet
Yes,
transfer.
continence, all those different
Okay.
basic activities.
Okay.
If you're not able to do any of those activities for, 90 days.
Which happens a lot, right? For example, you go
Absolutely.
out there, you have an accident,
Yes.
maybe something happens, you're sick, you can't,
Absolutely.
okay.
Yes, and not just that, also cognitive impairment, such as
Okay.
Alzheimer's and mental dementia.
Okay.
So if you find yourself in that situation and say you don't have a long-term care insurance plan,
Mhm.
you will end up depleting all your savings to pay for nursing home care, and which is very expensive. Most people don't know that. For
Mhm.
private care, is annually is almost $98,000 and going up by the year.
Wow.
So long-term care insurance is very essential, and statistics have shown 70% of people turning 65
Mhm.
will need some form of long-term care, right?
Right.
So that is another layer of proper protection. The next thing is disability insurance.
Disability.
So
Okay.
God forbid you're not able to work due to a disability. Now, how would you ensure that you have an income replacement strategy that will help pay you while you're in that disability situation?
Right.
So that's the first layer. The next thing we'll look at debt. We want to ensure that your debt is properly managed.
Okay.
What kind of debt do you have? What are the interest rate? Are there strategies, possibilities to lower the interest rate if you have unsecured loans, right? So we look at all that.
So what does it mean unsecured? I know I've heard a lot about good debt and bad debt.
Yes.
What is all that? And when you're doing that analysis, how do you pinpoint, hey, this is a debt you need to get rid of now, or this is a debt that you can hold on to a little bit, or is it a total strategy of debt free?
So the ultimate goal is to get people
To be debt.
to be debt free.
Right.
For some people, the goal is not to get them to the debt-free mark, is to be able to properly manage debt.
Debt, okay.
Because you can leverage debt to buy assets that
Mhm.
will continue to appreciate in value,
Right.
right? That is good debt.
Mhm.
So most people, they will have good debt and bad debt.
Right.
Good debt like maybe a mortgage,
Mhm.
right? Because that is something we need to have
Right.
right? But bad debt, you have Target credit card, Macy's, BJ's. You get credit card to go on a vacation, and you're not even able to truly pay for it. So a lot of people have all these things, and then they even take personal loans to go and enjoy, and they don't use it to
Wow.
buy assets.
So you mean like swapping credit cards for vacations?
Yes, and I mean it's not inherently bad.
Mm-hmm.
But if you're swiping the card and you truly cannot afford to pay that credit that you're using,
Mhm.
then it becomes really detrimental to your overall financial standing.
That is
Because
so
number
true.
one,
And the
you're bringing
interest
down-
rates are
yes,
crazy.
Interest rates are crazy. So
Right.
you're bringing down your credit score because of utilization and so much.
And
fraud.
credit is king.
So those are some of the challenges.
Right.
Then the next, after debt management, we look at emergency fund.
Emergency fund.
Yes.
Okay, what is that?
Emergencies will happen. One of the biggest emergencies now is people losing jobs, especially the IT industry.
The layoffs.
Yes, the layoffs are in the thousands. So that's one emergency. What about your car breaking down? What about they call you from back home that your cousin swallowed cooking spoon and they need money for surgery?
Is that a true story? But
Of
yeah,
course,
things
exactly,
happen.
right? So those things, washer, dryer, the roof
Mhm.
start leaking, those are emergencies. So if we don't have emergency fund, think back during COVID.
Mhm.
A lot of people, their job was gone for a year.
Right.
And for those who pay attention, if you drive through the toll,
Mhm.
now you don't see any toll attendant.
Yeah.
So those jobs completely
Ah.
gone, with COVID, and after COVID,
And
we
with
don't see-
AI.
with AI and all. If you go to Walmart now, for most Walmart,
Mhm.
in the night, you don't see a cleaner no more. They have
robots
those
are cleaning.
robots that go around and clean the store. So for those people who that was their job, if they were not properly positioned to be able to get another job, so now the job is gone. If they didn't have an emergency fund to last them for a long time
Mhm.
before they could get another job, then they may find themselves in a situation where their home is being foreclosed, their car is being repoed, and there is a ripple effect from that. So
Right.
emergency fund, we want to make sure at least 6 to 12 months of our monthly expenses is saved up to take care of emergency.
Wow.
Then the next layer,
You said 3 to 6 months?
6 to 12 months.
6 to 12 months.
Yes.
Okay.
Before I used to say 3 to 6 months, but COVID made us understand that, you know, three months is not enough.
So that is money. So you have to look at what is it that you spend every month. Do we
Yes.
usually even know how much we spend totally every
Well,
month?
you have to
Be
have
able
a
to
budget.
budget.
Budgeting is the number one thing. If you're not budgeting, you're not doing yourself well. Because if you don't budget, you cannot know how much
You
amount
have to
you're
give
supposed
every
save.
dollar a name.
Yes. I always say money is a tool. Each dollar has to have an assignment. In school, when they give you an assignment, you don't bring it back the same way they gave you.
That's right.
Right? You have to come back with something more lengthy. That's how
Mhm.
when you give money an assignment, it has to go and come back.
Right.
So you must give it a purpose.
Mhm.
That's what I educate people on. So once we finish with that, then the next layer now is investment.
Investment. Okay. So we've gotten life insurance, we've gotten health insurance, we've secured long-term care, we have disability insurance, we're working on our debt, and then we have some money
Emergency fund.
saved for emergency to
Yes.
cover at least a year worth of our expenses.
Yes.
Then we venture into
Then
investment.
we have investment.
Okay.
Most of those things can be done simultaneously. It doesn't mean that you should start only from one without
Yeah,
the
no,
other.
okay.
You can do some of it or all of it simultaneously.
Simultaneously, okay.
Depending on your financial situation.
Right.
So the goal is to meet people where they are, because there are people who they are not even able to afford to
Mhm.
get proper protection right now.
Why?
Money is too tough.
Okay.
Right? The money is just stretched too thin.
Mm-hmm.
So they have too much debt. We want to first start addressing the
The
debt,
debt.
situation. So we will work with them, show them a strategy on how to pay up their debt. We use like a debt roll-up strategy. Some people call it snowball
Okay.
strategy. So we
Mhm.
work with them, make sure that we help them get out of debt. But some people, they're not making enough money. So we show them ways on how to increase
Make
their cash
extra
flow.
income,
Right.
okay.
We also have a business opportunity. They can come work with us. We help them getting licensing, getting appointments with the different companies that we have on our platform, and teach them and mentor them on how to go about helping other people get their finances right.
Right.
So I feel like the work we do is from a holistic approach. Based on your situation, we are able to provide solutions at every level.
At every level.
Right. So-
All right, so have you come across people that say, hey, I don't need life insurance,
Mhm.
I'm still young, or life insurance is for other people when I'm no longer there, I just want to live my life. What will you say about that?
Well, those are really valid concerns, right? I discuss with a lot of people. My youngest client,
Mhm.
who is paying for her own policy, is 18 years old. I was so impressed. So I was educating a mom
Mhm.
on, two different things. Number one was protection.
Okay,
She's from Barbados.
okay,
So I was educating her on the necessity for life insurance from a personal standpoint, not through her job.
Right.
She had just $50,000 of
yeah. How do you also deal with people that say, hey, my job is giving me all of this money, plus my spouse and my children, but the risk with that is when you leave the job, what happens?
So when you leave the job, there are two different things.
Mhm.
For most people, when they leave the job, most often it's involuntary, right? So you're laid off. The first thing you're thinking about is not life insurance.
That's right.
And you have 30 days through Cobra to put out the insurance and start paying it, yourself.
Mhm.
And then it becomes a little bit more expensive because you're taking out from the group plan. Now it's individual, so
Right.
the rate may be higher. But I always tell people, if you have coverage at the job,
Mhm.
take it. But always have a personal one. The one other job may not be able to cover all the liabilities that you have. So when we're looking at how much is your true insurable need, we look at what is your debt, right? Especially if you're married, say your debt now, if you or your spouse, you co-sign on it. If you're not there, your spouse inherits that debt. Then we look at your income. We want to make sure that, God forbid, if you're called too soon,
Mhm.
for at least the next 10 years, your income can be replaced to your family, leveraging a life insurance policy. But if you have just 50,000 at your job, it may cover just your funeral, right? Especially for our African funerals. Imagine, first of all, you have to make a party here, and you have to feed 300 people. They have to drink.
500
Or
people.
500 people if you're a popular person.
Yeah.
And then you have to take the body back home. It's about $22,000 to $25,000. Then if you have
It's
a family,
expensive.
right, say you have 3 kids,
Mhm.
plus yourself 4, and you know buying the flight is last minute.
Right.
It's not like you had planned
You had planned to,
Yes.
yeah.
So the flight too is very expensive. So for 4 kids, if each one round trip is probably $1,500 to $2,000.
Mhm.
Now you see that $50,000 won't do anything.
That's right.
So say you go back home, you have to also throw a big funeral. By the time you're coming back to a mortgage, a car note, the kids' education, the income that that person was bringing was no
It's
longer
no
there.
longer there.
Right?
Mhm.
So all these different things, then the debt that maybe you guys, you co-signed on. So you've inherited all these different bodies. And now you have to get multiple jobs to be able to provide. But one thing that most people don't understand is, if you take for example, say the husband is gone, you the spouse now, if you have to go get 3 jobs, who will be there to take care of your
For the
kids?
kids.
What
You're
kind
gonna
of
miss out
doctrine?
on their upbringing.
Right? What kind of doctrine? Will it be YouTube, TikTok, or Instagram that will be bringing up your kids?
Parenting in the tech world,
Right.
very, very
So
tough.
that's a big challenge.
Yeah.
So we make sure that people understand that getting it from the job is okay, but you want to have a personal
No
one.
one.
And don't just buy life insurance just for buying life insurance.
Mhm.
You have to understand, what am I trying to achieve with this?
Right.
Because the
So
financial
that was gonna be my next question. What is the best life insurance policy?
the best life
to get.
insurance is the one you have,
Okay.
right? At that point in time, because if you have a life insurance policy,
Mhm.
if you fall down today, depending on the kind you have,
Mhm.
they will pay out.
Right.
So the people who have like accidental death and dismemberment policy,
Mhm.
which is usually you have to die by an accident,
Right.
and sometimes if your body gets dismembered before they will pay.
Right.
So what most people will have that, I usually tell them that, hey, this is what you have. So especially if you're not in a risky
Mhm.
job environment, you may still pass away. But now this may not pay out
Okay,
to your
because that's
beneficiaries.
not what it was
Right.
for.
So the contract states that these are the conditions that will trigger the benefit from being paid out to your beneficiaries. But you didn't die by an accident, your body didn't get dismembered, so your beneficiaries don't have anything.
Right.
That's why you see a lot of people who say, oh, insurance companies scam, but they didn't read the contract.
You have to read the
Right,
contract,
you must
read the
read.
fine prints.
Absolutely.
So what are some of the challenges that you face providing financial services?
Well, I'll start from our community and then, I'll move out from the community. So our community, the biggest challenges are trust issues.
Okay.
But we have.
Why is that? Because this is a great product.
Yes.
As you said, it's hard to save 500 a million, but you can get that in life insurance and pass it down to your family.
Yes.
You can have long-term added to it where you're benefiting from your life insurance while you're still alive. So it's not always when other people benefiting from it. You
Absolutely.
contribute to your life insurance policy, you add the long-term care so that if you happen not to be able to perform just 2 activities of daily living, that you're able to benefit from it. I feel that is a great product and that everybody should be embracing it, especially in a country where healthcare is very, very expensive. So what do you think the resistance is coming from?
Number 1 is trust. Number 2 is ignorance.
Okay.
Right?
So
Because-
how are you breaking these barriers?
So, I'm trying to create bigger awareness because it starts from awareness. When people become aware, they start lowering all the walls they've built by
Yeah.
themselves. So I have, I started a business. I've been in business now for over 8 years. And some of my closest friends are not my client. And you'll be shocked. And sometimes they say, oh, you want to come and take my money. And I tell them, you don't pay me.
How do you change the mindset of when you come to someone in your one market, meaning your family and friends? How do you change the fact that they can understand that this product benefits them and not you? Because I feel like my observation has been people feel, hey, you're driving a Maserati, you probably want to drive a Dodge next time. That's why a Porsche next time. That's why you're coming. You're coming for my money. It's more of your interest than mine. How do you shift it to say, hey, it's more, I'm serving you. It's more of your interest.
The biggest thing is education, right? You have to be able to properly articulate value, right? what they're paying, what they're getting. So you have to simplify it in a way that even a child can assimilate the information and see that, okay, this thing is actually for my own good.
Right.
You know, because life insurance is not something we discuss in our community, right?
It's like you have plans to hurt somebody.
Yes.
Why are you talking about life
So,
insurance? I'm here forever. Don't talk about life
Right.
insurance.
So I was talking to this guy. He's 52 right now.
52, yeah.
So I was talking to him about a will. He asked me, do I want to kill him? Right.
So everybody should have a will.
Yes, but before we get into a will, still on life insurance, our community, I think a lot of awareness has to be brought in from the grassroots.
Okay.
And as we start having these examples of those who have been able to benefit from the life insurance proceeds, we have to really make that known. Because most people are not aware. They just feel like, well, I'm paying this and they won't pay my family, or this won't benefit me, and so on and so forth. So we have to really break down the walls of ignorance. Because a lot of people are completely ignorant of how life insurance works.
Okay.
And most people don't even want to expose themselves to the information, because dying is not something that people even want to listen to.
Right.
So we have to make it, we have to
Dying is
normalize it.
imminent. We just don't
It
know
is,
how or when.
Right, the clock is ticking. And I was at this event last week, and this guy said he spent 365 days practicing how to die through sleep. Right, so for all the years you've been practicing how to pass away through sleep.
Through sleep. Because you could sleep and sleep forever.
Right, so it was very phenomenal, because I was thinking that, oh boy, someday we'll sleep and not wake up.
Do we have we put the things
Have we
in
put
place
the
that we
right
need
things?
to?
And what is priority? And I feel like in our community we prioritize the wrong things. And we have, for a lot of people, we have to redefine what enjoyment is. For most people, it's alcohol, nightclub, and
Nice clothes.
all the
Vacation.
right
We work so hard, so don't we
Absolutely.
deserve that?
You do. But do you just want to have temporal enjoyment? Or do you want to have a long-lasting enjoyment? So while you're here, you continue to enjoy, and when you're gone, your family
Can
continue
continue to
to
enjoy.
maintain that lifestyle that you've exposed them to, right? Because
Right.
it is terrible. I have uncles who were very wealthy, in the past, and today they're nowhere.
I think we've all seen situations like that in our community or in our personal families where someone was doing well and the moment they're gone, the kids start struggling, the wives are struggling, and all
Absolutely.
of that.
And I feel like when we are building all those things, we need to be able to properly educate the younger generation too. Because nowadays there's a lot of talk about generational wealth and next of kin and all that. Because if you don't educate the people that stand to receive maybe $500,000 or $1 million or $2 million, whatever you're insured for, imagine an 18 or 21-year-old getting $1 million with no financial literacy.
Right.
You may just have ruined your life, because you're given the money with no control.
Okay, so what you're saying is you can build wealth for your loved ones, but you
Yes.
have to make sure that they are educated on how to manage
Absolutely.
that wealth, because they might eventually just ruin it.
Yes.
Okay.
It means
So how do you make sure that you've left wealth and you're reassured that while you're away, that is going to be passed down generation to generation, that one generation is not just going to come and ruin everything? How do you ensure that?
Yeah, so that's where proper estate planning comes into play.
Oh, it's estate planning.
Yes, estate planning, or sometimes we call it legacy planning.
Okay.
Right? We want to make sure that we have a will,
Mm-hmm.
we have a trust. Trust is stronger than a will, because a will still go through probate.
Okay.
If you pass away and
That's interesting. What is probate? I always hear that word. What is that?
Probate, let's say, God forbid, somebody passes away
Mhm.
and they don't have a will. Probate court, your estate has to go through probate. They
What
will
is
determine-
probate court?
So if you don't have a will, or you don't have a trust, if you pass away,
Everybody.
everybody in America, right?
Wow.
If your family, especially if your family starts fighting over what you have.
Mhm.
Say maybe you have two kids and this one say, oh, mom told me to get the house.
Mhm.
And this one say, no, the house is for me, and they start fighting. It goes now probate court. Probate, they will have a judge determine how the assets will be split in the estate. But before that, they
I don't think it's something that we understand, given that we are immigrants, because it's like, I work hard for my stuff. How come the state, in some name called probate court, is now making decisions for my loved ones?
Yeah, because you didn't make the decision, right? And if you don't plan, do you think that the government have a better plan for you?
I don't think so.
Right, absolutely not. So these are things that we must ensure that we have in place. Like if you have, especially if you have young kids, as parents, you want to have guardianship documents. Because most of us, we assume that if...
So everyone with kids should have guardianship
Yes.
documents.
So we assume that if we're called too soon, my sister will take care of my baby, or my brother, or my this.
Or my friend.
Or my friend, but you don't have it in...
It has to be in writing.
It has to be in writing through that guardianship document, because if you don't do it, the kids will end up in foster system. Most people don't know that.
This is very informative.
Right, it
So
is.
for everyone that has a child, or has a loved one that has a child,
Yes, especially
the,
young kids.
the advice is make sure that you do guardianship paperwork.
Absolutely. Right.
In the event something happens to you early, this is what you want
Yes.
to happen to your kids.
Absolutely.
Wow.
Then-
If not, the government comes in and make a decision.
Of course. Remember,
Wow.
your child is not just your child in America, right? So that's why.
A lot of truths that we
Yes.
truly, I'm learning a lot today.
And if you make a mistake, that's why you see Child Protective Service can come and take your child away from you if you do anything crazy,
Right.
right? You make a mistake, they can take your child. So these are things that are very necessary. And also around estate plan, when you have a trust, you can have instructions as to how you want assets to be managed or money to be managed.
So is a trust a big umbrella where you have guardianship, you have all of these things, or are
So
they
those
different?
are separate documents.
Okay, so those are separate
Right.
documents.
A trust is a separate entity.
Okay.
So it's like maybe an organization, it's like a whole different individual.
Mm-hmm.
So it's a separate entity. But most people who want an added level of protection over your property,
Mhm.
they can do like a deed transfer of their home into your trust, where the trust now owns the home. Because take for
Who
example,
establishes a trust?
you can establish the trust.
Is that part of a service that you offer?
Yes, we do offer that. So when you establish a trust, you can do a deed transfer of your home or other assets that you have into the trust.
Mhm.
Where ownership now is the trust owns, all those different things. But you now are, the one that controls the trust. So if somebody sues you, they
Mhm.
cannot get access to those things that are in the trust because it's a completely separate entity.
Got it.
Like, I was in court last week.
Mhm.
Someone, hit me about 2.5 years ago. So it became her word against my word.
Mhm.
So we sued her and sued the company that she was working for. So if we had won that case, they would have had to pay not just her, but also the company. So in your situation, if you have things that are directly tied to you,
Right.
now they can put a lien on what you have and force you to pay.
Great. Very great conversation. I think we're gonna need a part 2, but let's talk about the kids. Let's talk about college planning. How do you make sure that how do we make sure that our kids don't get into the same rat race of student debt and all of that? How can parents plan and at what stage should they start?
I always tell parents, the moment you have your child, 15 days after, once they have like the social security number, you want to set up a plan
So immediately.
immediately because time runs really fast.
It does.
Right? By the time you close your eyes, this kid's at 5. You close it, you blink twice, they're at 15. By the time you want to close and open, they're going to college.
So what you're saying is averagely you have a baby, you open a policy for them, you can be guaranteed that if you continue to contribute to that policy that they can go to college
Yes,
debt-free.
depending on how much you're contributing into
Right,
it.
right.
At least you'll have a good amount of money that can help towards college.
I like
But-
that transparency.
Yes. Truth is, if you're contributing $50,
Mhm.
when you do the math, that's not a lot of money.
Right.
Well, even if it's $100, $100 is $1,200 a year.
Right.
If you multiply that by 20, it doesn't yield a lot of money, but at least it gets them to a better place compared to if you don't have any plan.
Anything at all.
So if they find themselves in a situation where they benefit from scholarship, grants, financial aid and all that, then you might have just, given them a golden ticket to have a better future. Because they can leverage that money and do whatever they want to do.
That could be money towards their first home.
Absolutely. And for most parents, they will get a 529, which I always tell people, if you have a plan, it's better than you not having any plan.
That's right.
So with a 529, it comes with various limitations. And one of the biggest limitations is when it comes to cost of attendance, when they want to determine if you're eligible for, needs-based financial aid.
Right.
They look at cost of attendance, then they look at expected family contribution. So if you have set up a 529 college savings plan, now your kid will not qualify for a needs-based, financial aid. But they'll rather give it to another person who may have gotten a plan that is not disclosable.
Got it.
So those are some of the limitations. And also, since most 529, the underlying investments are directly in the stock market. So you may wake up one day, let's say we get hit with a recession, and you lose 20% of that portfolio that you've been building.
So what you're suggesting is, instead of having a 529, get an insurance policy, a life insurance policy for the child that has an investment attached to it.
Yes, you could do that. Another thing also, there might be some limitations, assuming that, say maybe the kid is not able to qualify due to health reasons, and you'll be surprised. I've had kids that have been denied coverage due to health issues. I've had adults who have been denied.
So even though our community say, hey, I don't want life insurance too is very picky. They have to make sure that you're healthy in order
It's
to
a
have.
privilege, it's not a right. The same thing they tell you at the MBA, getting a driver's license is a privilege, it's not a right. The same thing with life insurance. I've had people that they look completely healthy, but they're not insurable.
So the earlier you get your life insurance, the better for you, because
Absolutely.
as we age, there's a tendency that other comorbidities could come in.
Yes, absolutely. So
Awesome conversation.
it's a lot more challenging as you grow older, because if anything happens, if you go to the hospital, your medical record,
Yep.
insurance companies will
Have
be
to
able
look
to have
at,
access
are you
to that,
insurable? Yeah.
right? So when you are filling the application, you grant them the right
To be able
privilege
to
be able
have
to pull
access
your
to your
medical record. So they pull it through our medical information bureau. Same as how we have credit bureaus such as TransUnion,
Right.
Equifax, and Experian. So they have MIP where they pull your medical record from, and they can also look at attending physician statement. So every time you go to the doctor, but most people they just keep running their mouth. Oh, I feel like I'm suicidal. Oh, I feel like I'm having.
All of that is in
All
your
that
record.
is in your record. And so you might be declined just because you said some stupid thing during your doctor's appointment.
Well, we
and
still
your
want
record.
people to tell the doctors how they
Right,
feel.
you have to tell them how you feel, but you have to be certain about what you really feel.
Right, that's
Don't
right.
just say it because you just want to say it and sound intelligent, right?
That's true.
So you want to be sure of what you're saying and all that. And also, lifestyle.
Lifestyle.
If
You have to
had
eat healthy.
DUI, speeding tickets, I had a friend that was declined coverage because he had 2 DUIs and
Wow.
he had like 6 speeding tickets.
Yeah, if you have a DUI, it means you're drinking and driving.
Yes.
You're not a safe driver, so you
So-
have a likelihood of.
Yeah, so they
You know.
decline coverage for him because they know that, okay, this person might have a death wish. Insurance companies in the business of making money. It's not a
I like the way you say that, because sometimes people feel like, no, they're just there to help you.
No.
Yes, it's a joint, it's a collaborative
It
effort.
is.
You have to look out for you first.
Absolutely.
You have to have a healthy lifestyle. You have to make sure that you get your life insurance policy early enough. You have to make sure that by the time your baby is born, your niece or nephew or cousin, make sure you can give them the gift of life insurance policy instead of throwing a $5,000 first birthday party, which is okay, but making sure that we are protected first. I think we need a part 2 to this conversation.
I think so. One thing
Yes.
before
What do
we
you
go.
think? I think that we need to bring Mr. Philip back in order to have another conversation around money, building generational wealth, and all of this good conversation.
Yes.
Yep, 2 minutes.
So one thing before we close, still on the child's college fund.
Yes.
For most parents, especially women who file for the kids during tax season, if you get a tax refund for the kid, I don't know, I think it's like $2,000 or something.
I don't know either. I don't remember.
It's not disclosed, but anyway, so you can take that money, and every year
You just
dump
put
it
that
into
towards
the
their
child's
policy.
college fund. So we have parents that are very okay with buying Jordans almost every other month, but they're not comfortable contributing $100 or $200 towards your kid's college fund.
Wow.
And every single day we see baby showers in the community. People throw money in the air. Committee of friends, we can come together and say, hey, we will not, missed is in the financial service. Can you set up a college fund for this kid?
Right.
This is maybe $2,000 that we have, as friends, will put together. Rather than throwing money on a woman that is pregnant, she's dealing with cramps and pains during that event. So for me, sometimes I look at baby shower like it's a really dumb thing, especially when people are throwing money on the woman that is pregnant.
Well, that's some money for her to go do the policy with it. Those are gifts, right? So I feel that is.
But for me, it's not about the giving money. It is the how it's being given.
Given,
For me, I
okay.
feel it's a little bit degrading, right? Because she's sitting there with because baby shower is really close to when you're supposed to
Yeah.
put to bed, right? So all those contractions, some of it that are happening.
We're gonna leave that alone because I love parties, I love baby showers, I love all of that. But I think that what we are telling families is it's okay to celebrate with family and friends, but make sure that your finances are together.
Absolutely.
Make sure that your family is protected.
Absolutely.
Tell us one thing that you've done in your financial journey that you feel so fulfilled, and just let us know about what keeps you moving.
Yeah, I think one of the biggest things for me, normally I used to be a party person, right? Like club and all
So
that.
the club just lost a member.
They did about 2 years now. I don't drink no more, so I haven't had alcohol in
That's
1 year,
good.
6 months. But prior to that, I used to come to Silver Spring most Fridays, and I'll party, and I have to drive 1 hour away in Haffa County,
Go home.
sometimes 1 hour 15 minutes.
You're living your best life.
Yes, I
How
thought
about
I
that?
was, but the thing is, a lot of times I was so scared because I was thinking to myself, what if I don't make it home?
You're
Right.
driving sleepy.
Because I'm driving sleepy
tired.
and tired, so I was always worried, what if I don't make it home? And the moment I got my first life insurance policy, it gave me a different kind of peace of mind, knowing that, okay, my
Even
brother-
if something
even
happens,
if something happens,
that your son
right.
is protected.
But, then my son wasn't there then, because I had my first policy almost 8 years ago.
Okay.
So I was like, okay, if God forbid a call too soon, at least my brother, my
Left something.
wife, my brothers back home, my parents, they will have something.
So life insurance is a necessity.
It's peace of mind.
It's peace of mind.
So when I tell people the work I do, I bring peace of mind to families, especially concerning your finances. Whether it's around college planning, retirement planning, asset preservation planning, or debt management, any area of your personal finance, we help ensure that you have peace of mind. And also for those who have businesses, we show them various tax saving strategies that they could, leverage to minimize their tax burden and ensure that they are building something for themselves. One thing we've seen in our business community, especially for small business owners, they don't pay themselves,
Yeah.
which is a terrible thing. And usually they use all your personal funds. Now your personal fund is tied in the business, so if something were to happen to the business, you lose on both sides, both the business and your personal. So you're
Are
being
down.
bankrupt at two different places in one time.
In one.
So we educate them on strategies on how to properly set up, how they can leverage the business to pay, for their retirement and ensure that if something were to happen, they have that protection in place. So
I know you have a whole lot of information,
Yes. There's too much.
great
more.
gems to be able to spill out everything on this episode. But how can people contact you? I'm sure from this episode, a lot of people are going to be like, hey, let me think twice. I need to be able to protect my family. I don't want to look rich. I want to actually be rich for real.
Yes.
So I want to build wealth. How can people contact you?
So I can be reached directly on my cell, 443-531-3774.
Can we have the number again?
443-531-3774. 3774.
Okay.
I usually pick up my calls 24/7.
Awesome.
If I don't pick it, means I'm helping somebody.
Okay.
And then I'm also on social media. On Instagram is my name, Philip Deska. I can be reached.
How do you spell Ndeska?
It's Ndezka space AH.
Okay.
So when I came here, America gave me a different name.
We're not going to get into that. We're not going to get into that. But I know definitely we're going to share your information also
Yes.
in the podcast. We are so glad to have you today. Thank you everyone watching today. I'm sure that you learned a lot. Make sure your money works for you. Make sure that you build well. And make sure that you protect your family. Thank you so much.
Thank you.